Howdy, Jacob here. Today we're going to be going over our next dividend yield screening company, and today's company is Ardmore Shipping Corporation, ticker symbol ASC. Wow, 8.93% dividend yield. Let's see how this one goes. All right, so pretty equivalent market cap enterprise value. That's good. Good cash on hand versus their long-term debt 116. They've been buying back pretty consistently since 2016, so that's been good. Oh, could be one time massive gains. That's too bad. So there's no way this 8.93% dividend holds. I would be flabbergasted if it did. I mean, we're looking at $1.23.12 negative 3.52. I mean, it sounds like when they do make money, they'll give it to the shareholders through a dividend. But if they don't, I mean, how are they spending their money? Buying back debt. Well, I guess their cash flow is better than their net income, so that's good. But um, looks like they issued a bit of shares here. So they're issuing shares when their PE is cheap. Um, but I guess they're not buying back any, so it's not like, I mean, they bought back some in 2017. But all right, so let's start making some assumptions here. I mean, we have what appears to be absolutely masterful growth, but if you look at, a 5-year period between 2017 and 2021, there's really no growth. Companies like these, and I just don't know what to do, because if I don't know the business and I'm just making assumptions based on history, I can't really say, 446 over 36 to the power of, zero point 0.1 to get their 10% growth rate, because I just don't. It could easily happen. It's definitely a possibility, but for a value investor who's trying to be conservative, you should see this crazy double in revenue and be a little skeptical that that's going to keep. And so, I mean, stuff like this, I might even do 0% and say, you know what, maybe it drops 20 to 40% in the next 2 years and then gains at 5% a year. Because again, um, the way my calculator works is it just cares about the revenue at year 7. So if it doesn't care what the revenue is doing in between. Uh, but yeah, I think I'm going to do the classic 0, 10, 10. I don't see any reason it deserves any high multiples. Margins have been kind of consistent. I mean, they've dropped quite a bit from 13 to 18, but then, I mean, not too far off. Operating margins are plus or minus. Yeah, they've been going pretty crazy. But yeah, I don't think, again, if you're looking for a dividend stock that's going to be paying you free cash flow, I'm just not confident this one is going to stick around, because as you can see, they have 7 cents, 40 cents, 61 cents, 40 cents, 0, 5 cents, like 0, and then $1.15. So I mean, I'd say they would cut it in four. What's going on? Cut it in four, and then maybe keep that. But this is one of those companies in the oil, gas, and consumable fuels that's just gonna, when oil is super high, when the commodity of oil is super high, they're just gonna be paying out a lot of dividends. When it's not, and they're maybe not making any money, they're just not going to. So maybe it's conservative to say it's gonna divide by 4 and then do the same, but more likely going to be something like $1.15, 60 cents, 0, $1.20 or something. So, but just if everything were to be consistent over the period that I'm looking at, or the prospective period I'm looking at, I feel like dividing it by 4 and then keeping that seems relatively consistent. 29 cents per share, and their free cash flow is better than their earnings. Revenue 0, 10, 10. Income margin, I mean, we're shooting in the dark here. Like, average it out. Let's do something wild. Let's do like 6 and 12, super different. They'd be issuing shares a bunch. 15. Yeah, I mean it's it needs to drop a lot. Who knows if these assumptions are right? I mean, it's a company that I just don't understand very much. I definitely have to dig into the 10Q and 10K to understand it a bit more, listen to some of the calls, but just from initial numbers, it's just not making much sense to me. If it's making better sense to you, great. If you think this dividend can hold, good for you. If you understand the business. But if you don't, and you're just looking at it as an 8.93% yield, yeah, that looks fantastic. But I'd just be surprised if they could keep that and keep it even close to, a solid dividend going forward. Thank you, and I hope you have a good day.